Greetings, this is Dwayne from CFRN. It is Saturday night here in Phoenix, Arizona. Saturday, April the 20th, 2013. It is 10:21 p.m. Pacific time. I haven't done a video, I don't think, all week, so for lack of a better word, we'll call this our weekly recap video. I don't have a script, no specific agenda. I'm just going to walk you initially here through what happened this week in the S&P 500 E-mini futures. Now, our daily recap videos, those are available on our website, and quite frankly, we're a little bit behind, and I hope to get all of those caught up tomorrow. But the way to find those, if you're on our blog, for instance, on the right-hand side of the page, just go to where it says Live Trading Room Results. Click that, and it will take you to a page with a daily video recap of everything that happened in the live trading room that day. We do the recap during the daily radio broadcast. So feel free to tune in each day at 12 noon Eastern. When we open up the radio program, I usually have, well, we have the good word for the day, little spiritual encouragement. Then Michael, who's in Boston, he takes the charts and the screen, and he does a narration and shows you all of the trade setups that we had in the live trading room that day. For those on the free trial and partners, they're in there with us trading each morning in the live trading room. If you've not taken a free trial, by all means you should do that. Just come to cfrn.net/apply. This is the trading room results page, and the results go all the way back to August of 2011 and up through March of 2013. And wow, I'm really behind. Today, what I say today was the 20th. Michael films these, and I'm just waiting for him to get them in the hopper so that I can put them on the website. And I'll really try to get all of those done for you tomorrow. Our results this year, we really caught a spark in December. We set a new record, $4,300 per contract, excluding commissions, in the first 2 hours of trading only. It's important to point out we miss about 80% of the opportunities because Michael is not only putting on and taking off trades, but he's also answering questions and teaching. Not making excuses, just saying pretty good results given that we're only trading live. This only reflects the 2 hours that we trade live each day. Any trades that we take, outside of the live trading room, we don't put those into the results here on the page. We want our results that are on the page to be trades that were actually taken in front of other folks, real people, so that they're, verifiable results. In January, we did a little over $4,000 per contract. February, $3,900. March, we broke a new record, $5,200. And I don't have the numbers in front of me, but I think I heard Michael say on Friday when he was doing the recap that we're over $3,000. I'm sure that's what he said. We're over $3,000 so far for this month. So I don't know that we're going to have a record-breaking month, but certainly we're going to have a good month. So you can go and just take a look at these videos, and he walks you through each and every trade setup, the ones we took, and the ones that we weren't able to take because we were on another chart taking another trade. So it's, if you've never seen the recaps, it's a good way to learn about who we are, what we do, how we do it, and then, of course, you can take that free trial. But let's go back to what happened this week. I'm going to start out on last Sunday evening because it's now again Saturday night, and tomorrow afternoon we have the Globex Open and a brand new week begins. So here's what happened last Sunday night. We sent out a tweet that says to consider being short below 1578. If you don't follow us on Twitter, by all means do. It's free. Go to twitter.com/CFRN CFRN. Twitter.com/CFRN. Now you do have to have your own Twitter account, which is also free. But just go there, twitter.com/CFRN, and you can look at our tweets going back a couple years. And if those are the kind of results that you might be interested in, well then certainly follow us on the Twitter. But keep in mind that our goal is if you become a CFRN partner, by the time you finish your mentoring, you should be well on your way to being able to spot the type of trades that I tweet out. Our goal is that at the end of the mentoring, you no longer need a guru to, point the way or call out trades for you. We want you to become your own guru. We want you to be able to look at a chart, assess it, determine if there is a trade there, and if there is it a long trade? Is it a short trade? We want you to be able to determine exactly where to enter that trade, not, in an ambiguous kind of a way, but our trade entries with the slingshot trade, which is what you'll see in the live trading room, those entries are defined to the tick. Never a question, but to the tick. So we had a tweet go out last Sunday night, said to consider being short below 1578, and then the tweet also said consider adding to your short position if the market goes below 1575. So from 78 to 75, that gave us a 3-point trade. And if you follow us, you know that we consider 2 points a day to be a great daily income. 2 points a day. What is 2 points a day? Well, in the S&P 500, it's $100. And so when we trade in the other markets, we're always looking for 8 ticks, but basically the daily goal on a trade, we're looking for 8 ticks, but the daily goal is $100 per contract. Now the S&P 500, the Dow, the NASDAQ, and the Russell, the intraday margin to trade those with our broker, Daniels Trading, it's only $500. So if you put up $500 in, or you use $500 of your margin to trade one contract, and you take 2 points out of the market, which is $100, that's a 20% return on investment. What's kind of nice is that although you're using $500 of intraday margin to put the trade on, you're not really risking $500. You're risking it because you are in a trade, and in the markets anything can happen. But we teach you to use a hard stop. We believe in aggressive risk management. And so on a slingshot trade, we only risk 2 points or 8 ticks in the S&P 500. How much is that? That's $100. Okay? So yes, you're tying up $500 of your account to place the trade intraday, but you're only risking $100 of that 500 that you put up. Now in a fast market or a flash crash, yes, your stop could get jumped, and but those are rare occasions, and you may get slipped a tick or two, but again, that's rare. Okay? A hard stop basically keeps you covered. And the S&P 500 is very liquid, so there's never a problem with entering or exiting a trade, even in the middle of the night, because the middle of our night is the beginning of someone else's day, and we do trade the global markets. This is a Globex chart that you're looking at. So we look to make $100. We risk $100. Okay? That's per contract. As you become confident with your trading, as you become consistently profitable in your trading, over time you will move from the simulator into live trading. You'll start with one contract. After you've earned $1,000 trading with one contract, that would be 10 consecutive $100 days, or maybe you have a couple hiccups in there. So it might take you more than 10 days. It might take 20. It might take 30. I don't know. Every person is unique. Every situation is unique. But it could happen in 10 days. Point is, once you make $1,000, that's when we say if you're ready psychologically, you've earned the right to add a second contract. So what does that mean? Well, now that you're trading 2 contracts, It's going to tie up $1,000 of your margin. You're still only going to risk 2 points, which is now $200 because you're trading 2 contracts. And the profit side, you're looking for 2 points, same 2 points. You haven't increased the number of points that you want to take out of the market on a given day, but you've put yourself in a position to double your income because 2 points on 2 contracts is worth, that's right, you already figured it out, 200 bucks. Make another 1,000, you bump it to 3 contracts. You make another 1,000, you bump it to 4 contracts, and so on until you reach your comfort level. Now, by building your account this way, you're working with money that you actually earned in the market. So whatever you open your account with initially, whether it's 3,000 or 5,000 or 10,000, the goal here is capital preservation. What we don't want you to have to do, and what you don't want to have to do, is go back to your savings or back to Aunt Ida or get a part-time job, whatever it takes to, restoke that trading account. Most traders do blow up their first trading account, but most traders don't use aggressive risk management the way we teach you, and they don't build the number of contracts in the manner that we're teaching you and that I'm telling you about right here, right now. So it's good advice whether you become a CFRN partner and trade with us for the rest of your life or not. I'm just going to give you some free advice. Start out in the simulator, stay in there until you're consistently profitable. I don't care what method you're using. When you do go live, only go live with 1 contract, and then only increase the number of contracts with money you've made in the market. A lot of folks get into the simulator and they get discouraged. They're not consistently profitable. They try a couple different things. It doesn't work. And so they go, you know what? Who am I kidding? It's because it's monopoly money. That's why I'm not doing good. Because deep down inside, I'm just not taking it serious enough. But if it was real money, I'd sit up and pay attention, and I'd be more focused, and I'd do a much better job. Friend, that's about as flawed and faulty a thinking as I'll ever come across. And I know because I thought it. I may have been I may have been the originator of that thought process. Okay, I may have been the first guy. I'm just saying. That doesn't work. If you can't do it in the simulator, adding the pressure of real money, real losses, that's not going to help. Okay? And now here's what I've seen happen. You're in the simulator, you're not profitable, but you convince yourself that if you go live, that somehow is going to make you become profitable. And so you go live with 1 contract, then, the devil gets into your thinking and goes, well, the reason you're not doing so good with this 1 contract thing is because, you're trying to get 2 points, but it's only $100. You can't pay your mortgage. You can't even make your car payment, off of that. So, I mean, really, man up. Put on 5, put on 10. Your account can handle it. I'm telling you, it's the devil talking to you. If this sounds like the voice of experience, take it for what it's worth. Don't do it. It won't fix the problem. I promise you, it won't. One more time, consistently profitable in the simulator. Go live with 1 contract, make $1,000, add another contract. Make another 1,000, add another contract. Now, keep in mind that once you start to add that 2nd and 3rd and 4th contract, the amount of time it takes you to make the next 1,000 to get to the next contract, that begins to compound and snowball pretty quickly. There's a flip side to that coin. Losses can compound and snowball pretty quickly too. So once you go live, you don't have to say goodbye to the simulator forever. A lot of guys feel that way. I can't speak for the women, but I know for men it's like an ego, it's a manhood thing. Oh, I'll look like, I don't have the stones or something if I go back to the simulator after I've already gone live. And the broker might laugh at me, or if anybody else finds out, they might, think I don't have what it takes. That is, again, faulty thinking, okay? A smart man will spend time in the simulator, go live, runs into some issues, whether they're mechanical, psychological, whatever it is, you go back to the sim for a few days. Work out those issues. Go back live. Have some good days. You hit a bump in the road, a big bump, a pothole, slide back into the simulator. Work it out. See, this is a marathon, not a sprint. Okay? This is a journey. This is a journey you've begun and you'll be on all the days of your life as long as you continue to be a trader. At some point you'll feel like you've arrived, but another part of you will know that you will never completely arrive, that you'll always be learning, but you'll reach a point where you become confident and consistent in your trading, and that's what you're shooting for. Okay? But your destination is a moving target. All right, back to this week. From 78 to down to 75, it's 3 points. That's a great day. You can call it a day there. All right, I'm done. And that's what we encourage. Go live life. See, trading can bring you two things: income and freedom. It's up to you how you play that hand. We said consider adding to the position at 1575. If you did, nice little drop from 1575 down to the next weekly trading zone at 1562. From 75 to 62, that's a 13-point drop. Okay, on top of the 3 points we already had, that's 16 points. Now, if you're fast with the math, if you're looking to get 2 points a day on a 5-day week, that's 10 points. This trade here, from here to here, 16 points. Whether you're trading one contract or 100, 16 points. The market held up here at the weekly trading zone, which is exactly the type of action that we anticipate. And the reason is the market is now at a critical area and it needs to make up its mind what it's going to do. Is it going to return to the previous zone from whence it came, or is it going to continue its journey in the same direction? Well, the market spent a half an hour right here in this little 1-point zone, 61 to 62, 1 hour or a half an hour, and then a full hour. These are hourly candles, and then another partial hour. So we'll just say 2 hours between all 3 candles here. And then price pushed on down and closed well below that weekly trading zone. Live on the radio show, I said, consider adding to your short position if we go past this area right here. And that price was 1554.50. Okay? So anyone that added to that position at 1554.50, price ultimately went down to our lowest weekly trading zone for the week, 1542. So from 1554 to 42, that's another 12 points. Now if you add that to the 16 up here, that's 28 points. That's 30 points in this big decline. Okay? Is that an everyday event? No. Is the market a river of opportunity that never stops flowing? It is. All that happened here is we stepped into the flow of opportunity at the right time. Okay? And those waves just kept catching us and carrying us and taking us. There will be times that you step into the flow of opportunity a few minutes too early, a few minutes too late, and occasionally you'll step in facing the wrong direction. Okay? Don't let that throw you for a loop. It happens to the best of traders. Okay? There's nothing wrong with being wrong. What you don't want to do is stay wrong. That's why we use a hard stop. We also don't really use terms like wrong. It isn't about being wrong or right. We have clear defining criteria for our trade entries. And so as long as all of the criteria is met when we enter a trade, there's no such thing as being wrong. We followed the rules. We did what we were supposed to do when we were supposed to do it. We didn't hesitate. We didn't jump the gun. Everything lined up. We took the trade. And the market decided to go the other way. There was more buying pressure than we anticipated, or more selling pressure than we anticipated. And we were long and the market went south. Or we were short and the market went north. It happens. You're going to have to get over that. That psychological hang up destroys more traders. It's probably the single biggest killer of trading dreams right there. You got to get your head into the game and your emotions out. Got to leave them at the door. If you bring them to work with you, you might as well just stay home. Now, each person, it's going to be a unique journey for each person to work that out and sort that out. What I do encourage is that you read a book by Mark Douglas called Trading in the Zone. Okay? There's no charts, there's no setups, there's no indicators, and that's why a lot of traders don't want to spend the $40 to buy the book, because the guy, it's just a bunch of psychobabble. Well, I got news for you. It's not psychobabble. What Mark teaches you in that book, Trading in the Zone, he teaches you how to think in probabilities. Okay, look at a casino. A casino. All right, let's do this. I don't like to use these gambling analogies, but I will, because Mark uses it in his book. That you have the gambler and the casino. The casino is consistently profitable. That's how they build the big buildings with all the shiny lights and can afford to give you free cocktails, while you, Joe from Omaha, sorry Joe, you win a few hands, but by the time the weekend's over, we know how that story ends. Okay, but you won enough, you'll come back again next year. Now, how is it that the casino always wins? Well, it's because the deck is stacked in their favor. I don't mean they're cheating. I mean that they are the house. They created house rules. They stick to their rules, and the rules are skewed in the favor of the casino. They have the edge. Now, with trading, what we teach you with the whole CFRN partnership and the slingshot trade and all of our indicators and our methodology is we teach you how to have an edge. And that's all you need in the markets is an edge. If you have an edge and you apply it consistently, without fear or hesitation, on a regular basis, then that is success in the markets. What I teach people is once you've built your business plan and your trading plan, you no longer have to grind yourself every day about becoming some great trader. Okay? Some of us, might become the superstars that they write books about, but most of us won't. Most men enjoy baseball, but few of us will ever pitch for the Yankees, right? Doesn't mean you can't go out and have a great game of catch with your son and really enjoy it. And I don't want to make trading sound like a hobby, because if you got skin in the game, it's very much for real, okay? You can earn a good living trading without ever wandering into the, valley of the rich and famous. I don't want to create images in your mind, or I don't want to get you thinking about that stuff. Okay, this isn't the kind of trading educational program where we show you pictures of lots of shiny cars and women with augmentation and cigars and all of that. No. This is the Christian Financial Radio Network. You will hear us talk about building orphanages and caring for the less fortunate and taking the gospel to the ends of the earth. We won't ever hit you up for a donation, but that's what we do with our money. Okay, you do with your money whatever you want. I'm just telling you what the majority of the traders, we are a community of believers who trade for a living. Most of us are using trading to not only pay our own bills, to care for our own families, send our own kids to college, but we're also using that to fund our ministry, whatever that ministry might be. If you're in ministry, you already know that ministry costs money, real money. In most cases, lots of money. That money has to come from somewhere. That somewhere is either you out asking for donations, you having other people fund the vision God gave you, or taking matters into your own hands as a trader and generating the revenue yourself to fund the vision that God gave you. Either way is just fine. But if you're in ministry, you know that tonight you stand at those crossroads, or today, whenever you're watching this video, and you have to decide how you're going to do it. Is trading a viable option? It is a viable option, but not everyone who sets out to become a trader ends up being successful and trading for a living. Okay? I don't want to discourage you. I just want you to understand the reality. Okay? Not every preacher that steps into a pulpit becomes the next Joel Osteen. And I got news for you. The world's full of broke preachers. Financially, not spiritually, but financially. Okay? But that's a whole nother soapbox and a whole nother sermon. So let's get back to this. Speaking of wanting money, I guess the malware bites folks want money. I'm outdated by 47 days. Better send them money. Okay, this was our lowest weekly trading zone for the week. What does that mean? Well, what it means is that we don't expect the market to close this week below here. We issue these zones to our partners every week. We have been doing it for years. And what we have found is that 9 times out of 10, the market will close inside of the weekly trading zones by the close of business on Friday. It may spike the highest or lowest zone during the week, but by the end of the week, when the final bell rings on Friday, price will have wound its way back inside of the weekly zones. And we expect when price approaches a zone, we expect there to be consolidation as the market makes up its mind whether it's going to, in this case, go back to where it came from or continue on to the next zone. So here it is, a Monday, and we've already hit our lowest weekly trading zone. Again, these are hourly candles, and look what happened. We spiked that thing. We spiked it all the way down to a low of 1538.75, but look what happened. By the time the hour closed, this candle closed at exactly 1542. The next hour, look at that small body. The body fits inside of this 1-point range, 1542 to 1543. That's the market consolidating, coiling, making up its mind what its next move is going to be. See how we had 3 hours here, or 3 hourly candles here? Again, 1, 2, 3. Is it always 3? No. I'm just pointing it out. So you kind of get the idea. There'll be some time spent here. Now, you can go to smaller time frames like a 1 minute, a 10 minute, or a volume chart, or a tick chart, or a range chart, and you can see how price plays out inside of the zones, in and around. The market made up its mind. It says we're heading north. Okay, buying came in, and we launched from the 42-43 weekly trading zone, and we ran up to 1555. We pulled back to 1547. We continued the advance right up to the weekly trading zone at 1561/62. Remember, we were just there. Okay, big sell-off. All of a sudden, it's like it never happened. Okay, hourly candles. How many we got? 1, 2, 3. See, the market tries to get through there for an entire hour. It's banging its head up against this level, this 1561. It can't get through. Next hour. Next hour. It's banging its head up against that level. Can't get through. Third hour, it breaks through. Again, it's not always 3. This is just this is what happened this week. So it breaks through. Now, once it breaks through, well, hang on, let me go back for a minute. Markets rarely move in a straight line. They channel. They advance. There's a pullback. There's a retracement, and then they advance. And then they advance, and then they pull back. Now, let's take a look at this advance right here. Okay, if it sounds like we lost connection there for a second, I did pause the video to answer a question, and now I'm back. I just drew the fibs for that move, and let me do it again. Okay, from this swing low to this swing high, right there, swing high. Price pulled back to between a 38 and a 50%, 38.2 and a 50% retracement. Here's the thing about fibs. They are subjective in that, number one, people aren't always sure where to start drawing. Here it's pretty clear cut. You got to draw from here, from this swing low to this swing high. But it's not an exact fib number that it pulled back to. So here's my thought. Let me just share with you. If you've been around, you've heard it before. Fibs, of course, are an area. They're a great tool for like a heads up or confirmation of some other thing you're looking at. But as a standalone trading tool, no. Don't spend too much time on that. Now, I spent a couple years exclusively on fibs, trying to turn them into a standalone trading methodology. I gave it my best. And I know a lot of other people, some people, some very close friends, who also gave it a couple years, and that was all they focused on. And everyone to a man came to the same conclusion that I came to. Great tool, but you got to have something else to confirm. So I said all that to say this. You could, once this little spike was put in right here, you could have drawn these fibs, okay, and then you could have defined an area on your chart that embraced the 38 to 62, right? You with me? So you put this little square on your chart, 38 to 62. Now remember, all you've got is a swing high. You don't have the pullback yet. But you've got a square, and on the low side, what do we call it? 1544.75 to 1549. So it's less than 2 points. Now, we only risk 2 points on a slingshot trade. So if you come back into this box and then roll out to your 4-tick range chart to execute the trade, once you get into the box here, and if you get a setup on that 4-tick range, you're good to go. Take that long trade. We've already launched from this zone, so we anticipate once we move this far, we expect that price is going to continue to the next zone, where it will then consolidate, make up its mind what it's going to do, and go through the whole process again. Okay? Now, I'll show you this just in case you've never seen it before. I'm going to go to Drawing Tool. We're going to go to Fibonacci Price Extension. I'm going to go from the swing low right back up to that swing high. Grab the little medallion, put it on the swing low. And this gives us potential price targets on the upside. Notice that none of the extensions handed out to us line up with that high. So what's my point? Well, I mean, here was a target. I mean, it did hit the 100%, but then the other one's on the way up. And I might have one that's grayed out. Let me look at my properties. Do I have one turned off? Let's see. 23, 62. No, it looks like I got them all on. But anyway, I just wanted to show you how the tool works. I know that this didn't hit a specific level, and I'm not trying to dissuade you from using Fibonacci. As I said, it's a very fascinating study. It's everywhere in nature, and if you have already a working knowledge of it, you can certainly put it to use with what we do. Okay. All right. So price gets up to this, back up to this zone, 61.62, and look at what it does for 3 hours. 1, 2, 3, punches through. 1, 2, 3, punches through. Now, once it punches through and does this little pullback here to the zone, okay, which is what we, again, love these trades, we expect it to go to the zone. That's what we expect. Once it does this, pulls back, takes off like this, for this thing to fail here is unusual, a bit surprising, but it gives us some important information about the market. There is an inherent weakness in the market, because once it does this and starts this move and takes out this swing high, There's no, look left. There's nothing in the way of this thing getting up to the next zone, but yet something did. Okay, and remember these are hourly candles. So it tried for 1 hour, 2 hours, 3 hours, couldn't do it. It finally gave it up. Okay. Now, if you were long from back down here on this pullback, if we're going to measure pullbacks, that's not going to be a 38. And I guess if I'm going to do it, I better grab the actual swing low. Okay, this first, now I'm not measuring this one. I'm measuring this one. Okay. The 38 would have been just below the weekly zone. Okay. So we got this 23.6 retracement, which is not one I typically put a lot of weight in. But on a momentum-based trade, it actually can be valid. So it's up to you. It's a matter of preference. All right. But this swing low was 62.50. The swing high up here, the swing high was 70.75. There's 7 points in this candle. Now, if you've been around the S&P 500 for a while, you know that back in the day, this is what we used to see back in the day. 7 points in 1 hourly candle. And more. Now, we've gone through a period of very low volatility where we might only have 7 points in the entire day. The entire day session might have a 7-point range. We're getting back now into some action, two-sided action, which is good, where we have some nice volatility. Now, volatility is great. Volatility represents opportunity. Remember I talked about the market being a river of opportunity? Well, a river is no good unless it's flowing, okay? And the volatility, that's the flow. What happens when a river doesn't flow? It stagnates. People start to get sick from it. Yeah. All right. So there is tremendous selling pressure here. The market, after 1, 2, 3 hours, can't do it, man. It cannot get to this zone. It gives up. Now, if you're trading this move, there were 7 points available. The market made 7 points available. Not us, not CFRN, not our indicators. The market on this beautiful break above the zone and this pullback. Market said, here's another 7 points. Well, that's almost a week's work. At 2 points a day, times 5 days, 10 points. This one candle, right there, could have been most of your week. And I got news for you. If you sit down and start doing the math, you don't have to have 10 points. Once you build up the number of contracts you trade, 7 points could be a pretty awesome week. All right? But I'll let you do that math. Now, let's not sell short either the fact that we had a zone-to-zone move. Okay? If you start following us and you start tracking the zones and you go back and look at all the historic charts on our website, years of them, you're going to find that what price does day after day, week after week, is it goes from zone to zone to zone to zone. It's just what it does. Okay, so this move from this zone at 42.43 up to 61.62, if we just measure it from the inside, 43 to 61, I'll say that again, 43 to 61 at 18 points. Yeah, 18. Okay. All right, so then what happens? Well, we struggle a little bit. We start to sell off. You know, fibs work both ways if you're a fibber. Now, here's a to the tick, 62% retracement. Price came down, retraced to the 62% retracement, and then the market got heavy. We get back to the zone, and look what happens. Hourly candles, 1, 2, 3 full hours this time. We print a doji right in the middle of that zone. Now, I'm going to be honest with you. When I saw that doji print in the zone, I thought, wow, this could be a great place for the market to turn and head up again. But it didn't. Okay? Always watch the candle after the doji to give you some kind of directional idea. We get a red body candle. Now, as we start to break the swing low here, here, and here, it's pretty obvious where the pressure is on the market. But then look what happened. We get down to here, and then the market runs right back up to kiss the zone and say goodbye. Remember over here how we broke through, pulled back to the zone, and ran? Look what happened over here. We broke the zone, pulled back, dropped again, pulled back, and then made the run. Where to? The zone. Now you might be looking at this and going, well, yeah, not exactly. I mean, look at all these tails down here. Okay, that's true. We spiked to a low of 38. Over here, it was 38.75. So here the market put in a lower low, 3 ticks lower. But notice on the hourly, it never closed. Now again, this is on a Globex chart. Globex charts start at the top of the hour when the markets reopen in the afternoon. Day session charts start on the half hour. There's a whole school of thought there, and you really should come take the free trial so that I can explain to you why that is important. And trust me, it is important. Okay, so the zone holds for 1, 2, 3, 4 hours. Now, price after this big candle, trust me, price is trying to break this zone. Up here where we were bumping our head into the zone, you know, boom, boom, before we could finally break through. One of the trading educational organizations out there, they have a terminology for this called, I think it's like blue ice, but I think the point of it is, it's like you've fallen through the ice and you're trying to find the hole in the ice to get back up through, and so you're hitting your head on the ice. See, over here you fell through the ice, but over here now your head's bumping up against the ice, boom, and then finally you find the hole where you fell through. Phew, you shoot right back up through it. Okay, free visual, I won't charge you for that. Okay, so price finally breaks out of the hold of the zone, makes a swing high up here to 50 1/4. Now if you took the trade from 30 from the zone, if you took that up to 50 1/4, that's a nice trade, 7 points plus. Then look what it does. It pulls back to where? The zone, just like it did here, just like it did here. Now it happens here. Is that an anomaly that it happens 3 times in a row? Well, go look at those historic charts on our website. Go to the blog. There's years of them. And if you go all the way through the current blog, there's a link to take you back to what I call the CFRN Museum. There's even more charts back there. Okay? So price runs, the zone holds, price runs, comes back. We put this long-legged doji in right here. I'm really looking for the market to climb higher. It did. Okay? I put out a tweet to consider being long about 1551. We got up to swing high of 53.5. But these are hourly candles. Okay? On the break of 51, the initial run was to 53. So there was 2 points here just on this tweet. On the first candle, price went from 51 to 53. Pull back to 51, prints a doji right at 51, and then on this candle it runs up to 53.5. So this candle the market made 2 points available, and on this candle the market made 2.5 points available. Typically we see our tweets run a little longer than that. This one up here, there was a tweet here too. I forget the number exactly. Wait, it might have been 1569. The point is it only went let's see, the swing high was 70.75. For whatever reason, I recorded it on the Twitter as a stop out, because I didn't think it was worthy of counting towards a 2-point daily goal. But here there were 2 trades off of this, 1 for 2, 1 for 2.5. Okay, price comes back down, tests the zone, and holds for 1, 2, 2.5 hours, falls through. Okay? I throw out a tweet, consider being short below 37. Actually, I put these tweets out at the same time. I said, if I recall correctly, consider being long above 51 or short below 37. In my mind, they were both valid opportunities, even though the 37 was going to take us below the lowest weekly trading zone. Thing is if the market decides to go there, whether I got a zone or not, I'm not stopping it. So, go where the market goes. That's where the money is. Fighting the market will never make you any money. I promise you. Okay, 1537. All right, here's what happens. The market comes down, but then what does it do? Pulls back to the zone. Is this like a recurring theme? Yeah, for years. It's just what the market does. Okay? We break below the zone. We pull back to the zone for that resistance, that little kiss. See ya, goodbye. Now on this move below 1537, the market drops 6.25 points. Okay? In this one candle, 6.25 points. If you entered over here, you had a bit of a drawdown. Okay? If you're trading it hourly, if you drop down to a 4-tick range chart where you're only risking 2 points on the entry, you may or may not have gotten triggered in here. But certainly at some point in here you got your short entry. If it was on any of these candles, good chance you didn't get stopped out. If you got triggered in right at 37, then yes. So you can go look at a 4-tick range chart or come into the trading room and I'll show you exactly how this played out in the smaller time frame. Remember, these tweets are a bigger picture look at the market. Okay? But now we have some of our traders who will trade based upon the chart setup. Let's say they're going short here, okay, at 37. They might put their stop way up here because that's the previous swing high. But let's face it, most of us don't want to embrace that much risk on one trade. So what do? Well, maybe you just pass. Or you go to that smaller time frame so that you're able to get into the trade using the slingshot, a 4-tick range setup, and you only have to risk 8 ticks. Now that 8 ticks worth of risk, in this case, the market delivered 6.25 points. In this little move, from 37 down here to the end of the hour, 6.25 points. Remember, our weekly goal is only 10 points, 2 points a day. Okay? Let's move on. Let me put the divider in for Friday. I haven't done that yet. Okay. Is that Friday? April 19th. Actually, it's right there. This is where the new trading day begins. Right there. Okay. So price goes back to the zone and does what we expect it to do. Consolidate, try to figure out what it's going to do, make up its mind, that kind of thing. So for 1, 2, 3, 4, 5, 6 hours, look at how tight this range is. That's the stuff we see around the zones. Okay, 1, 2, 3, 4, 5, 6. Finally, it's able to break to the upside, and we get a little bit of air. See that? That little bit of space between that candle and the zone. But then what does it do? Pulls back to the zone. Same thing again. Pull a fib on this. From the swing low to the swing high. Look at that, 62%. See what I'm talking about when I say a confirmation tool? All right? Try it. Might work for you. Just don't go too far off the deep end and spend too much time. Okay? Because then it can become like, I don't know. It can cause you issues. Does that sound like the voice of experience? Okay, good. All right. We make a run from the zone at 43, fully expecting to go to the, ultimately to go back to the zone here at 61, 62. But if we look left, we know we have an obstacle in our path. What's that obstacle? Well, it's this swing high right here at 53.50. Why is that an obstacle? Well, because the market, which has a great memory, the market spent 1, 2, 3, 4 hours trying to break that level and keep going to the upside, it couldn't do it. So we get this and all of this and this and this. So on the way back up, we fully expect that we're going to run into some resistance in this area. Unless there's some news event or some other thing happens to really give a jolt, to the market, it's going to struggle at this point. We expect that. No big deal. Now, I did put out a tweet at the end of the day, but I based this tweet. Normally, I don't. We close the week with an open position, which is rare for us. Consider being long above 15.50.50. Okay, this thing got triggered in by, I think, one tick. Yeah, 15.50.75. Okay. Now, the reason behind this tweet, I was after the regular radio program, or at the end of the regular radio program on Friday, I spent a little time talking about our latest project, which is called Simple. Why is it called Simple? Because it's simple. Unfortunately, you can't trademark the word simple because it's already been done. But that's okay. We're still going to call it Simple. What is Simple? Simple is, it's not an auto trader, and it's not a red light, green light system. It is a trading methodology that we're working on. It's in alpha right now. And what it will do is, on an hourly chart of the S&P 500 E-mini futures, it will print on your screen your instructions to buy and sell. Now, you're thinking already, you're ahead of me. Well, wait a minute. If you can make it do that, then you can tie it into the auto trade and it can execute for you. Yeah, but that's not our goal. We're not really crazy about the auto trading systems, and I talk about it. If you want to hear more about that, go listen to Friday's podcast, which is available via iTunes, or if you go to the bottom of any blog post, actually you can do it. Oh, you can do it from right there. Go to the blog. See up here on the navigation, you click E-mini Radio Blog. That's going to take you to a table of contents. That table of contents will just, you can click on any, if somebody tells you, hey, that 4 steps to E-mini success video that Dwayne did is pretty cool, you should watch it. So you can just come scan down, find it, click on it. Or you can just view recent posts, and that takes you inside of the blog. Okay, you're opening the book, and whatever the last post is, that's what's going to be at the top, and then they're in chronological order going backwards. Okay, at the bottom of every and the last post, by the way, thanks for asking, I was stumbling around on Vimeo Friday afternoon, killing some time, and it's always funny on the internet when you run across yourself. A couple years ago, when I was trying to decide between YouTube and Vimeo, I already had some stuff on YouTube, but then Vimeo came along, and I thought, well, let me take a look at this thing, maybe. So I had uploaded like 3 videos to Vimeo, completely forgot about it, and then I found myself. No road trip or hallucinogenics required, and I found myself. All right. And it was the E-mini sentiment indicator, which is a tool in the toolbox, and all the partners have it. It's just not one that we've been talking about a lot lately. When we first introduced it back in early 2011, we spent a lot of time. And so here's what happens when new partners come along. You really have to go back and watch those old videos, because because it crossed my mind again, and we have so many new partners, it is worth us spending a couple days to a week of keeping a chart up of the sentiment indicator, both during the live trading room and during the radio broadcast, because it really is a very powerful tool. But that's not why I came to the blog. Go watch this video, and then if you take the free trial, by the way, if you're not already a partner and you haven't already taken the free trial, when you take the free trial, not only do you get to come hang out in the trading room for 5 days, but we actually let you download our platform, our charts, we give you live data, and our indicators, and we teach you how to use them. Not too many people do that. I'm not bragging, I'm just saying we're totally transparent. We don't want to sell you a pig in a poke. You know, we want you to know exactly who we are, exactly what we do, and exactly how we do it before you make a financial commitment to become a partner. That's why we give you 5 days in the room. That's why we give you charts and platform. By the way, that stuff's not free. Charts and platforms and data. Go look at your bill from TradeStation last month. It's about $300. Okay, it's not free, but we give it to you free on the free trial because it's free, right? We make it free for you. No credit card required. You'll be able to use the sentiment indicator for a whole week. I can tell you for a fact, and I know because trust me when I say that between me and Michael, there's not too many indicators out there that back years ago we didn't buy, test, try, whatnot. For what it costs you to become a CFRN partner, if all you got was the sentiment indicator and a little bit of training on how to use it, that would be a fair deal. Okay? But again, that's not even why I came to the blog. I came to the blog to show you that at the bottom of every post, you can just click listen to, because I had told you to go listen to Friday's podcast. At the end of the podcast, I talk about simple. At the end of the radio show, I talk about simple. So if you go listen to Friday's, which I haven't uploaded yet, I guess I better do that tonight. Or you can click the headphones right there. Okay? And it'll just start playing. You don't have to download it or anything. It'll stream. You can download it if you right-click. You can go right-click. Save link as. You can save it to your computer or your smartphone or your tablet, and you know, there's a million ways to listen to the program. Tune in radio on your smartphone, lots of ways. But again, that's another podcast. While I'm here, I might as well plug our trading computers. We have a new line of built by hand in the USA trading computers. Okay. It's called the CFRN TradeMaster. We've got 3 models: budget-friendly, workhorse, and the show-off. The first one we're rolling out is the workhorse. You know, the budget-friendly, yeah, it's okay if you're on a budget. The show-off, it's a lot of stuff you don't really need, but if you got the money and you want to pay for it, okay. The workhorse has an Intel Core i5, Intel motherboard, 8 gigs of RAM, a 500 gig hard drive, which is more than enough, because this computer is to only be used for trading. Okay? Do the other stuff somewhere else. This is your tool as a professional trader, and you have to treat it that way. You can burn DVDs in case you're recording. A lot of traders like to make videos of themselves trading, just like a professional athlete does, so that they can go back and critique how they handled things in the heat of the moment. See, after the trading day is done, if you're reviewing a trading video of some trades that you took, you might start to see yourself jumping the gun or hesitating or making any number of mistakes in relation to your plan. So that's why we put a DVD burner in there. Dual monitor support. Now the video card has a gig of onboard memory. You can hook up VGA, DVI, HDMI. So you can run two monitors out of the box. It's an ATX tower, which means nothing to you. 350 watt power supply, more than enough for an energy efficient computer. Logitech keyboard and mouse, 6.1 surround sound, Windows 7, 64-bit. It comes now pre-installed on your computer. You're going to get the DT Pro charts and trade execution platform, which if you become a partner and you become a client of Daniel's Trading, you'll never pay for charts or data again. It's free. They make an investment in you as a trader. TradeStation, the other guys, they don't do that. Okay? They charge you for that data. Now, Daniel's doesn't somehow get free data to pass along to you. No, they pay for it. But as a client, they invest in your success. They want you to know that they are serious about you succeeding as a trader. So they do everything because they sat down and figured it out. Most brokerage firms, unfortunately, it's kind of a churn and burn thing. They don't want to invest too much time or money in you because according to the statistics, in a year, you're not going to be around. You're going to be history. So they need to save their resources to kind of just pull people in, not waste it on people that have already signed on the dotted line. Daniels takes a totally different approach. Okay? Very little on the advertising and pulling you in. They actually spend their money keeping you alive in the markets. You know, helping you learn. A lot of educational material, training material, and our brokers, Bert and Leslie, they're also traders. So when you become a client, let me tell you something. You got somebody looking over your shoulder with years of experience. When you call in with an issue or a problem or a question or need some ideas for your trades, you're not going to be talking to some phone room in a third world country where the people have never placed a trade. I'm not knocking third world countries. I do a lot of work there. But you understand what I'm saying. There's no language barrier. And I'm not just talking about English. I'm talking about it's trader talking to trader. You don't have to try to explain to them. They understand. And they can pull up their screens and see exactly what you just did or what situation you're in. And they can advise you as a trader, trader to trader. It's a beautiful relationship. As part of your free trial, you'll get to know Bert and Leslie. You'll call them toll free, 866-928-3310. They'll do anything in the world to help you. And during your 5 days, they will treat you like a client. Okay? They won't like give you a half an answer because you aren't signed up yet. No. No, they'll roll out the red carpet. They'll do everything for you that they would do for a full-fledged client with $1 million account. Doesn't matter how much money you put on deposit with them either to open your account. You're going to get the same treatment across the board. That's just who they are. And that's why we have our loyalty with Daniels Trading with specifically Bert and Leslie. Now, back to why I came to the blog. I wanted to show you. It is the only computer, by the way, designed for the trader who trades for the master. There's a link you can click. At the bottom of most blog posts, there's an iTunes link. This is why I came to show you the blog. By clicking that, you can subscribe to the podcast. So that, and while you're there, would you leave us a review? We appreciate it. This way you never miss an episode. Maybe you watch the show every day live, but every now and then, something calls you away. Well, you don't have to remember to try to record it somehow or wait for the podcast. You can just know that in your iTunes account, and by the way, you don't have to have an Apple computer or an Apple telephone or tablet to use iTunes. iTunes works on your PC. It's a great way to manage all of your digital audio and video files. Good stuff. Free. If you don't have iTunes, go get it. Just go to iTunes.com or Apple.com. You'll find your way. Download it and then subscribe to the CFRN podcast. And it'll just be there waiting for you whenever you want it or need it. Okay? If you don't ever even listen to it, it's no problem because it's free. Oh, and by the way, did I mention you can leave us a review? We appreciate it. All right. Enough of that. So that's how we ended the week. Long, 15-50-50. Very unusual for us, but time kind of slipped up on me, and I saw the thing, and I go, you know what? I'm okay with this because I really do think the market's heading higher. I'm saying this on a Saturday night. Well, tomorrow night this time, we'll know if I was, right or wrong. That word we don't like to use. Okay, I teased you with simple. I'm not going to just leave you hanging. I told you what it does. It prints on the screen when you should buy or sell and at what price. I'm going to show you. Relax, take a deep breath. This is pretty awesome. Okay, now there's two kinds of candles with simple. This is how simple it is. Okay, you got hourly candles, and that's it. And you're going to have text on the screen. Okay, you get a signal candle and a trigger candle. Often you'll get a signal candle and no trigger candle. Now let me explain the difference. When this candle completed, when this hour was over and this hour began, simple printed up here by 15-50-50 based upon the mathematical algorithm that's running in the background that, has it looking at the trades and giving you these trade ideas. Now when it says to buy 15-50-50, there's two ways you can do that. You can just enter on a stop. Once this thing signals, you can go to your DOM in your trading platform and you can just put in a order to buy on a stop 15-50-50. That's one way to do it. The other way to do it is wait for the market to break through 50-50, and then using our slingshot setup where you never have to risk more than 2 points, go over there and put your trade on once you have a setup to go long. Now, like when this thing signals and the next hour opens, you go over there, well, number one, you got to wait for it to break 50-50. And then you got to wait for it to give you the long signal. Or, as I said, you can just go in at 50-50. It's up to you, however you want to do it. Now, so far, the swing high, as I pointed out to you on Friday afternoon, so far it's only 50.75. So if you got in on a stop, you're in a drawdown right now. I wouldn't be too concerned about it, but you are. I'm just being honest. Let's look at some of the previous trades of the week. Simple said to sell 1541.50. Okay? Now that's the signal candle. This is the trigger candle. Now, what do I mean by that? Okay, let's put a little line on here. That right there is that black line. That's 1541.50. Okay? So when this candle closed the hour, as this candle was opening, Simple typed on the screen, sell 1541.50. If you sold 1541.50 on a stop, for instance, in the first hour, what happened is we had a low of 38.50. That's 3 points. It's a day's work, a day and a half. 3 points. But then in the next hour, now you may notice that price pulled back to test that important area. Now we have a whole philosophy and theory on that. If you are already a partner, you know it, and if you aren't and you want to come hang out with us, you'll hear it again and again. We believe that important prices and areas are almost always tested. Why? Well, it's a long story, but they are. Okay? They just are. And I'll give you a better explanation of that if you come hang out with us. So the swing low was 36 1/4. So it turns out to be about a 5-point trade. You get 3 on this candle and you get another 5 over here. Is that right? Let's see, 36.50. 36 1/4 was the low. Yeah. So it's about a 5. 3 points on this candle, 5 points on this candle. All right. Let's scroll back. I'm only going to go through like a week. These are hourly candles. Here, Simple said to buy 38.50. Okay, on this one, now remember, this is the signal candle. This is going to be the trigger candle. Well, whichever candle breaks through 38.50, that becomes your trigger. Was it this one? 38, 38 1/4. There's 38 1/2. Okay? So on this candle, boom, 38 1/2. You're in it. And it ran up to a swing high of 45.75. So from 38.50 to 45.75, what is that, about 7 points? Okay, so there's about a 7-point move. Okay. Over here, sell 39.75. $39.75 is going to be, come on, should be right there. Yes, right there. All right. So signal candle, trigger candle. What was the swing low? 35.50. So basically a 4-point move. So there was 4, there was 7. I forget what I said this one was. 5. Okay. Now that's spread out over all. Let's see. This trade happened on Friday. This trade happened on Thursday. This happened on Thursday. Is there anything else on Thursday? Nope. Then we go back into Wednesday. Okay. On Wednesday, Simple said to buy 49.75. Here's the signal candle. 1549.75. Right there. There's your trigger. Okay. Now, here's the thing. This one, it only gave you a couple ticks. 49.75 to 50 and a quarter, 2 ticks. And then it went into a pretty good drawdown. Okay, depends upon your risk factor. If you were waiting for a long signal on the 4-tick range on the slingshot, you may or may not have been in this trade over here. You may not have gotten into it until you were over here. It's possible you didn't get a long setup on the 4-tick range. So all I can do is tell you what the swing high was, and that was 53.50. So basically a 5-point trade. The market made 5 points available. Okay. Here is simple said to sell 57 and a quarter. Okay. We get the signal on this candle, but we don't get a trigger until over here. That's 57.50. There's 57 and a quarter. Okay. And then price drops down to 38. That's a 20-point move. The market made 20 points available. 57 to 38. Okay, I'm just going to do like 2 more, and then that's it, because you get the idea. All right. Okay, here's now. Okay, I'm glad we got one of these examples. Here's 68.50 by 68.50, but look what happened. The swing high over here was 67.75. So what does that mean? Well, it means you don't get triggered in until price breaks up through 68.50. It never did. Not only did it not trigger you long, it turned around and gave you a short. Okay? So you'll see signals that do not have a trigger. And all that means is the signal candle tells you to wake up, pay attention, and then you either get triggered or you don't. Okay? Sometimes you'll go through a period of time where you'll have like signal, 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 signal. You might get a couple, 3 signals in a row, and then finally you get a signal and a trigger. Okay? That's just the nature of how simple works. So 64 and a quarter. Okay, here's 64 and a quarter. Right about there. So there was like 2 or 3 ticks in this trade. Okay? Is this a perfect? Is it perfectly simple? Well, it's perfectly simple, but it's not 100%. There's no holy grail. There's nothing that's going to be right all the time. Okay, you've already figured that out. You've come this far. You've already figured that out. Okay, you're just looking for something that gives you a high probability setup, something that gives you an edge in the market. I think you can see that there's a definable edge right here. Okay, this one said to buy 71 and a quarter, never got triggered. Never got triggered. Here it said to sell 62, but the lowest price ever got was 62.50. So this signal never got triggered. In fact, not only did it not get triggered, it turned into a long that didn't get triggered, which turned into a short that did get triggered for a little bit. Let's see, what was the swing low? 63.50. Yeah, there's like a point, you know. There's like a point in this trade. That's going to happen. Okay, just one more. Buy 15, 54 and a quarter. 54 and a quarter. From 54 and a quarter, the swing high was 68.50. So from 54 to 68, what's that, about 14 points? Okay, that's what the market made available. How much you ultimately take out of that, you know, on this pullback, you might go, whoa, let me out of here. Or maybe up here, you just go like, I don't even know what to do with that many points. I got to get out. Something's wrong. Right? You felt that way, haven't you? We all have. Okay, so I'm just showing you this because I want you to know that we have something in development that's pretty exciting. We're really looking forward to releasing it. Here's how it's going to work. It's in alpha. Once it makes it into beta, and I'm very excited about it, but we're still a little ways out from beta. Okay, so don't worry. I'm not trying to sell you this thing tonight because it's not for sale. Once it goes into beta, the CFRN partners will be the ones who beta test it. Once it completes its beta testing with over a couple hundred traders, then it will be released. But we won't release it, I don't think, as a standalone product. It will probably be released only to CFRN partners. Okay? If we release it, it will certainly go to partners. The question is will we make it available to the general public as well as partners? And I don't know. I don't think so. I really don't. I mean, maybe you can convince me, but pretty much everything we do is for the partners. We are a community of believers who trade for a living. We don't try to force religion on you. We don't try to make you believe a certain way. But we make it, we let you know up front who we are and what we believe. And sometimes I take heat for that, and I don't care. Hang on, I'll show you. I'll show you something. I'll give you my if you Google God Chasers and Emini traders, you can go read what I have to say about that. You can read it on my Seeking Alpha blog. You can read it on CFRN, wherever you choose to read it. But it addresses that question about, well, why the Christian Financial Radio Network? And, this is trading. Why do you got to drag God into it? Trust me, I hear that a lot. Okay? Read this. And after you read it, you might say, oh, I get it. Or you might say, well, I don't like that. Well, okay. God bless America. Because you don't have to be a partner. And again, if you decide to become a partner, I'll be honest with you. We have a partner right now who's a stone cold atheist. When I first met him in the live chat room on our website, you keep seeing this thing pop up where people come on the website. But in our live chat, I was sitting late, I think on a Sunday night. Late on a Sunday night. This guy pops in. He goes, hey, I'm checking you out. And I'm like, oh, hey, how you doing? If I can help you, let me know. I'm typing in. He goes, well, I've been watching you guys and looking at, your videos and your recaps. It looks really good, but, I just got to be honest with you. I go, well, what? What's up? He goes, I'm an atheist. He goes, does that mean I can't come in? I go, no, not at all. I said, number one is Christians, we're called to be witnesses to those who don't believe or might believe something different. But no, we're not going to try to force anything on you. You're not going to have to, sit in Sunday school or listen to a sermon, or you're going to be exposed to a bunch of believers who trade for a living. But beyond that, we're hoping, we might rub off on you, and we've had even people of different faiths who grew up in other countries. Do we let them in? Yeah, we do. Okay? Because we do want to be a good witness. And maybe, this is about trading, but just, the best thing, rather than me to go wax long, go read God Chasers and E-Mini Traders. Okay? It's not a Pulitzer Prize or whatever you call it article. It's just my heart. I poured my heart out right here. This is why. No fluff, no guff, just the truth. Truth's a beautiful thing. As the word says, it will set you free. Okay? So, we had a nice week. We got some nice stuff in development here. I don't know when we're going to get into beta. And then we've been in alpha for a year. We should be into beta within the next 90 days, hopefully less. And how long we'll be in beta, I don't know. Since it's going from beta, if it's only going from beta to partners, which is the same pool, then if beta lasts a year, that's okay. Because it's going to end up being released to the exact same people who are beta testing it. So once we go from alpha to beta, the pressure's off. Because trust me, the partners are all over me every day. dude, when are you going to release this thing? You know, you've been sitting on it for a year. Well, because we want it to be the very best product that it can possibly be. Is it going to be perfect? No. Are there going to be trades that get stopped out? Yes. Trades that have drawdowns? Yes. That's the truth about trading. It's the nature of the business. And if you're by any chance caught up in that vicious cycle of Googling till your fingers bleed at night, thinking that you can find that one magical indicator or that one magical time frame or that one anointed guru who can help you no longer have to deal with being stopped out and having losses in the market and all that stuff, I'm telling you, it doesn't exist. If it did, I would just use it and I'd be done with it. Now, maybe I'd share it with you, I guess. I share everything I have with you now. But I'm just being honest. It doesn't exist. It's not there. It's like looking for a black cat in the dark that isn't there. Now think about what I just said. It's like looking for a black cat in the dark that isn't there. Just stop. There are a number of ways to trade the market, more ways than I can count, more ways than I can fathom. There's good ways, there's bad ways, there's ways that don't matter. Now, by what I mean by a bad way? Well, by bad, I simply mean it doesn't give you a definable edge. And remember, if you take the time to read the book, Trading in the Zone, you'll realize with crystal clarity that all you need is a definable edge. And then all you have to do is write yourself a business plan and a trading plan, which we help you with. And then all you got to do is follow the plan. You don't have to worry about becoming a great trader. You just have to become great at following your plan. And if you're great at following even a mediocre plan, you'll do okay. You know, you may not drive a Ferrari or live in the big house on the hill, but you know what? There's more to life than that. I know that, and you know that. So this video has, as always, I start out to do a short video just to kind of, say hi. And an hour and 21 minutes later on a Saturday night, when I got to get up and go to church, tomorrow morning at church, it's Biker Sunday. I don't even really know what that means, but I just know that we've got bikers from all over the valley roaring out to our church to have fellowship and to break bread and to just have a good time. So it's our first Biker Sunday. I'm looking forward to it. They even gave us cool t-shirts to wear that say Biker Sunday. I would invite you to come tomorrow, but by the time this video gets posted out on YouTube and on our website, it will already have come and gone. But I do hope to have this posted by Globex Open tomorrow night. So with that, thanks for hanging out with me. Thanks for watching this video. If you have any questions about anything I've said tonight, or any questions about who we are, what we do, how we do it, email me, support@cfrn.net. One more time, support@cfrn.net. Also, many of your questions will be answered on our website or on our blog. Okay. Again, to get to the blog, you just click Emini Radio Blog. You get a table of contents. Or if you just want to get in there and just start wandering around, looking at stuff, reading stuff, listening to some podcasts, you can just do that. Okay. And here's what the free trial page looks like. cfrn.net. I think my browser just froze up on me because I got this video camera rolling and I just put all this video in the hopper. Oh, don't crash on me now. There's nothing more discouraging than to do an hour-and-a-half video and then have the thing freeze and lock up and not render. Yeah. So, say a little prayer for me. I just wanted to show you the apply page. Nothing fancy. learn how to trade Emini futures, register for a free trial. Everybody wants results. Everyone touts results. Our trades are taken in front of a live audience, and and you'll be that live audience if you take the free trial. In our live trading room, you'll see the DOM as we place orders. You're made aware of the trades before we place them. Okay, it's not one of those after the fact deals. We try to walk you through every trade. Hey, this is setting up over here on the NASDAQ or the Russell or the soybeans or the gold or the crude. We walk you through. Okay, we've got our divergence. We got a bullish cross. We got the pull away, the pull back. We got to close above the trend line. We're ready to enter at this price. Okay, so you can follow along because you're going to have a demo platform with your own charts and live data, but you've already also got a DOM, so you can execute trades in the simulator right along with us. So anyway, all we need is your name, your email address. Don't need your mother's maiden name, the street you grew up on, your favorite pet, and we don't need your credit card yet. If you spend 5 days with us and you decide that what we have to offer is very valuable, well then, yeah, we'll take your credit card and you can become a partner. Okay? And we believe in no trader left behind. So, what does that mean? It means we have a number of options available for you to make your payment. Okay? So don't let that freak you out or hold you back. You got to get through the 5-day free trial. You see, you have to be able to make a well-informed decision as to whether or not this is right for you. It's not a perfect fit for every trader. If it's right for you, then absolutely we want you to become a part of our community. If it's not right for you, we still like you to come hang out with us on the radio show every day. We broadcast live from 12 noon to 2 p.m. Eastern. We're now entering our 8th year of broadcasting. And so, yeah, by all means, even if you don't become a partner and trade with us, at least come hang out with us. During the radio broadcast, you're able to see our charts. You can ask us about specific markets, specific stocks. Although we're primarily futures traders, we can't answer your questions about stocks. We'll pull up charts. We'll take a look. We'll give you some ideas, what we think, So do that. Come hang out. And you see the big microphone here on the right-hand side? This is available on any page of our website. Click that page. It will take you to this page, live daily radio broadcast. Scroll down and click Watch Live Now. Once a month you have to fill out a short registration form, and then every day you get a little email that goes, hey, the radio show starts at noon. Just a reminder, when you're ready to join the show, click here. And really the most important part about joining the show is it allows you to see the charts that we're talking about throughout the show, and you're able to participate in the discussion and ask questions live in real time and get answers live in real time. So again, thanks for spending a little time with me. I hope to see you in the live trading room.